So you're looking to make your first $100,000 from Forex trading. I'm going to give you the simplest way to actually do it in the quickest way possible. A lot of people overcomplicate it, saying you need to do this, you need to do that, you need to backtest this much, backtest that much. But the simplest way to actually do it is by scaling and leveraging your prop firm profits. So a lot of people will be like, oh, this is actually the best way to actually trade with prop firms. But if you're looking to make more money, you can definitely leverage your profits to make more. But the correct way to actually trade with prop firms is to be conservative. So you'll see a lot of my payouts. I'll put a few on the screen here. You'll see that they're relatively similar amounts of money. So it's usually 4 to 6K in payouts. And this is because on a 200K account, this is usually 2 to 3% profit, or on a 100K account, 4 to 6%, but I will risk 2%. So I trade the 100K account like it is a 200K account. The main reason I can do this is because obviously I have a fairly high win rate and I understand my strategy, so I know when I can deploy more risk into my trades and when not to. So that's something you need to understand before you actually go into trying to scale these prop firms. But the best way to actually scale it is, firstly, you need to make profit on the account. If you're just trading prop firms and you're making good profits consistently, then you can actually do this. But if you have only recently started trading with prop firms, maybe you just passed your first funded account, then just focus on trading, adhering to the rules, and just getting payouts. That's all you really need to focus on. At that point, you shouldn't be focusing on how to make 100K. You should just focus on consistency, because once you've actually received a few payouts to your bank and you're starting to build up, that safety net, like cash safety net, that is when you could potentially look to scale it. But what I do with a lot of my payouts, my larger payouts, is I'll make 4 to 5K profit, and then what I'll do is I'll risk 3K of that profit on a trade. So let's say it's a 100K account, I'll be up 5K, which is 5%, and I'll risk 3K of that 5K. So we're obviously risking 3% on the trade, but if that trade actually hits stop loss, we're still 2% in profit. So you're going to be using that buffer of the initial profit you've actually made to scale it up. So then let's say you make a 1 to 3 on that trade, which is fairly average for a normal trader. And that is what I personally actually use, 1 to 3 risk to rewards. That trade will obviously make you 9%. So now your 105K account is plus 9K. You're up 114K on the account. So 14K profit from 2 trades. And obviously this can work against you. You could be down to plus 2K, but again, then you can just trade it normally, you get into profit. And if you make, I'd say over 5, 6, 10%, that is good, and you should just wait for your payout. If you've only made like 1 or 2%, and you could just wait for your payout, but you can get to a certain point in your trading. Like with me, if I buy a prop firm challenge, it's only a couple £100. It's not like people that have just started trading where that's quite a lot of money. I can go into these accounts and I can risk it. I can leverage the accounts because I know that if I do fail, I can just retake it. And I know that when I do get a payout, it's going to be relatively large. If I put up some larger payouts on the screen now, you can see that there's 15K, 16K, 19K, 20K payouts. And these are from leveraging the profits. So a lot of these days, if I actually get up my journal here, from when I was actually leveraging the profits back in the day. So this is what I used to implement last year. So you'll see here on this trading account, we had a 9K loss, but I think this did actually roll over for the month. But okay, so we had 9K loss, 18K win, 7K win. So now we're in profit on this account. So if you do the maths for those 3 trades, we're actually up around 15K. So now we risk 9K of that 15K, which on a 200K account, 9K is 4.5%. So we risk 4.5% on this trade, and then we lost that trade, did the same again, boom, 34K. So, and you'll see the equity curve here. Although the losses are 4%, but the wins are 17%. So we're obviously risking more, and the equity curve isn't even that bad. We're nicely going up into profit. And this account I made 26%, 27% in 1, 2, 3, 4, 5, 8 trading days. So just over a month of trading, we made 26% or $52,000 profit just from doing this. So I made some profit, I risked the profit. Obviously, using larger lot sizes, you are more vulnerable to receiving slippage because of, the small stop loss, the bigger lot size, and this is something you need to be aware of. So definitely don't go in risking 4.8% of your 5% daily loss, or even 4% really. I'd say like 2 to 3% risk if you are a good trader, if you have money and it's not really something that if you blow the account you have nothing left. This is kind of a good example of this is, let's say you do all your investing, you do all your normal expenses and your money saving, and then you have a few £100 extra. A lot of people will either put this in a stock that they think could potentially go up, or they'll go to the casino, or they'll bet on a fight or something like that. It's kind of like that spare money. So if I make loads of profit from prop firms, and you guys have seen my average payouts in comparison to the amount of money it costs to actually buy a challenge. If you get one payout out of 10, so if you do the maths here, 100k account and it's 450 pounds to actually purchase the challenge. If you fail 10, that's minus 4,500 pounds, and you get one payout of 5%. You're already profitable because 5% is obviously 5,000 pounds. So if you fail 10 past 1 with a 5% payout, you then get that payout and you're still trading the account. If you make another 5%, you're now plus 5k. You're now plus £5,500. But you failed 10. But because prop firms are the best return on investment, probably out of any other industry as well, because you invest 500 and you can literally make unlimited amounts. The only downside to this currently is with a lot of firms recently, they have been kind of known to deny payouts. And the best way to get around this is obviously to just request small payouts. So you make 2 or 3k, they're going to probably accept it. But if you make 50k, 70k, 100k, the likelihood of them accepting it in the coming weeks or months, I feel like it's very, very slim. So currently, I'd say the best thing to do is just rack up loads of small payouts. But the way to scale this is to obviously diversify across multiple different firms. Because if you are trading with just one firm, it's just like the saying, putting all your eggs in one basket. If that firm goes down, if that firm bans you, if that firm starts denying payouts, you're stuck because you can't get your money, you have no account to trade with, and you're just left with absolutely nothing. Whereas if you have 5 or even 10 different firms you're actually trading with, if 2 or 3 of those actually deny your payouts or ban you, or you blow the accounts for some reason, you still have 7 accounts ready to trade. And your 3k payouts over 10 accounts is 30k. So you're only making 3% profit on 100k accounts, for example, but that's actually 30% profit if you actually add it up. But it's still 3% because obviously it's on a £1 million account technically, so it's still 3%, but you're making 3% on each account. So it's kind of like you're making that 10 times. So that is what I do if I was looking to scale my prop firms. Some people will be able to do it because they have higher win rates. People with lower win rates or not as much experience in the markets with risk management and understanding their strategy probably won't be able to do this, but definitely keep it in mind. And that is how I've actually managed to scale prop firms and receive over 6 figures in prop firm payouts.